Mayuresh Joshi from William O'Neill is now with us on the show. Mayuresh, over the last couple of days in the correction and the rebound, have you recommended any stocks to your clients? And if yes, which ones?
Afternoon, Rima. No, again, I think we have been a little bit cautious over the last few weeks, remaining a little bit light at this juncture. And out of all the markets that we track, developed and the developing markets, I think a lot of markets are probably coming under pressure, both from a macro perspective in terms of what is happening with global bond yields, the delay in the interest rate cycle. And therefore, I think the macro picture for most economies probably in a downtrend as we speak. And that is probably getting reflected in terms of how micro earnings are expected to shape up. So I think earnings is a very key aspect in terms of our EPS rating parameters across market. And that probably looks a little bit wobbly as we speak. Obviously, I think over the next few days, if the market probably stays the way it is and sustains the lows that we've made, specifically on Nifty, and it holds on to those lows, and we get into a rally attempt, there is some element of sense that the market might be recovering from the oversold zones that we've probably seen. And therefore, 3-4 sectors probably come into the limelight as well. Agrochemicals as a space, I think the numbers have been pretty decent for a few companies, including the likes of Sumitomo Chemical India. I think the 9-month performance in terms of EPS numbers, they're doing around 8.13 rupees EPS compared to 7.4 that they did for the entire part of last year. And therefore, with expectations of reasonable volume growth, farm gate prices remaining stable, input costs remaining stable as well, margins should sustain around that 20-21% mark on an annualized basis. I think this is one space that we are keeping a very close eye on. Hospitals as a space, Rima, is something that we are keeping a close eye as well. I think a lot of the EPS RS rating institution holdings still holding up for a few players, including the likes of KIMS as an example, where the annualized run rate on what we map over the past 3 years has been pretty decent. 27% top line growth, 30% EBITDA growth, reflecting in very, very strong bottom line growth as well. And therefore, with the bed additions that they've probably done over the last few quarters, the occupancy rates have come down purely because of the additions done in the last 2 to 3 quarters. The average revenue per bed at 38,200 rupees should show sustained upward movement because of the therapeutic additions that they're probably adding across the hospital chains. And therefore, earnings probably might hold up for hospitals as a space, and being very, very selective on banks. So I think we continue holding a bank like Karur Vysya Bank in our mid-cap banks portfolio, because our belief is the numbers that they've presented and the commentary thereof in terms of asset quality, provisioning, advances growth, tier 1 capital that they're having, and the return ratios that they have been posting should probably sustain with strong credit underwriting both in the commercial and corporate markets.
Mayuresh, any view on the stock?
Not really, Nigel. We don't cover it, but a large part of the space itself and insurance players are going through a change in their product mix since the budgetary changes over the last 2 years. And therefore, I think we've started seeing some element of number improvements that have started happening, both in terms of value of new business margins, expectations of the higher annuity premium products are probably getting larger and garnering more market share, which means the product mix is changing for the better. Obviously, the commission and the upfront expenses are a tad bit higher for the likes of a large part of the life insurance companies, except SBI Life. But I think things are changing for the better, which might reflect better in terms of embedded value. So right. I think insurance players should probably.
Got it. All right, Mayuresh. I think we're almost out of time, but appreciate you joining in, Mayuresh, and filling us in with all those, with all that advice on a lot of stocks. We'll see you on Markets Forward in just a bit.